Hi, my name is George Dagnino. I'm the editor of the Peter Dack Portfolio. On this video, I'd like to show you something I think is very unique, is the accuracy of the business cycle indicator that we have developed. For some time, I've been saying that there are turning points, and a major turning point in 2024. And I will show you why and all the data. But the amazing thing is not only that it relates to the US stock market, but also to the international business cycle, and also with related to the major stock markets. It's quite reliable. I show several statistics on my articles or on other videos on how stock sectors behave differently depending on whether the business cycle indicator is rising or declining. But let me show you the evidence with the next slides. This is the chart of the S&P 500 going from the major peak in 2007 and this is the until currently. The focus should be the bottoms. The major bottom are 2009, then it's 2012, 2016, 2020, 2023. So every 3 to 4 years, the stock market has a major peak. This is important. Okay, these are the major, what we want to know. But the business cycle indicator that I will show you will also tell you when the defensive strategy, I call it, or when the market starts slowing down, will take place. Let's see now how the various international markets are acting, and you won't believe what they show. I think it's amazing. This is a chart of the world market ex-US, and it's an ETF published by Vanguard. And notice how this is 2007. And all the major bottoms here, this one, and this one happen exactly at the same time as the bottoms of the US stock market. In other words, what the world market cyclical behavior is exactly the same of that of the United States stock market. Let me show you some other major markets, because there is a major conclusion, which, by the way, there is a video that I published on this, is available on Patreon on why that happens. But let me go now to the next other major stock market. This is the action of the German stock market. Again, if we look at the behavior, you see the cycles even more pronounced here, because there is a market that didn't do anything for a long time. This is the peak in 2007, and look at where the bottoms are. Exactly like the US stock market and the world ex-US market. 2009, 2013, 12, 13, 16, 20, 23. So the cycle is exactly the same. The bottoms take place exactly at the same time. Let's see another one, the Japanese stock market now. This is the price action of the Japanese stock market. Of course, all is in US dollar terms. And again, you can see that the peak 2007, and then all the bottoms is exactly the same, and the same. So there are 2 important points to the conclusion, is that to come up with a cyclical behavior of stock prices so that you will see the bottom. Once the bottom or the top is identified, then you know that all the markets, United States and foreign markets, behave exactly in the same way. So what's the second point? That is very important. Sometimes you hear people say, well, you want to diversify in foreign markets. There is no diversification in a foreign market for a US dollar investor. Because as I showed you, all the markets in US dollar terms bottom exactly at the same time. When there is a bear market, all the market take a shellac. So there is no diversification. So when you buy a foreign market, you just buy volatility. You hope that is going to go up more than US market. There is a big catch with that. All the foreign markets since 2007 have underperforming badly the US market. So think about that. And to me, this is one of the greatest lessons. But now let's look at the business cycle indicator and how can be used for two purposes. Well, actually three. One is to see when there is a top. Another one when there is a bottom in the market. And then when the next top and bottom in the market are going to take place. So far, the top of 2004 seems, depending on the action on the stock market the last few days, 3 days, it looks like is right on the money. But let me show you the evidence in more detail. Let's see now how the business cycle can be used to predict the stock market and what kind of investment strategy an investor should follow. The top panel shows the S&P 500, the peak in 2007, and all the major important bottoms in here, here, and here. So the lower panel shows the business cycle indicator that is computed from market data and is computed every second. What the importance of this business cycle indicator here is that the stocks that do well or outperform the market during the phase that the business cycle is rising underperform when the business cycle declines. The sectors that outperform are cyclical sectors that benefit from the growth of the economy. When the business cycle declines, and we are in this phase, then the cyclical stocks underperform, and the sectors that outperform are the defensive sectors. So when there is a turning point in the business cycle from here to here, this strategy has to change. Cyclical, then slowly and gradually more defensive. So, and this is what has happened since the last bottom in 2022. The cyclicals have been very strong, but now in 2024, there is definitely a change in strategy is more appropriate. The defensive sectors, including bonds, are beginning to outperform. This is a classic when we move from phase 3 of the business cycle into phase 4. But the business cycle indicator has another major important feature. And the reason we have been predicting a 2024 peak in the business cycle is because if you look at the number of years from here to here, from peak to peak, from peak to peak, is around 3.5 to 4 years. And since the peak in the stock, the last peak in the business cycle was 2021, you add 3.5 years, you come up with 2024. So I've been saying 2024 there is going to be an important change in the behavior of the stock market, strong enough to suggest a more defensive strategy. And I don't think it's a coincidence that the bond market is beginning to is really on fire. So the next question is, okay, George, when is the next bottom? Well, I told you that from bottom to bottom is 3.5 to 4 years as well. Okay, from here to here and to here. Again, 3.5, 4 years. And since the last bottom was in 2022, if you add 3.5 years, you end up 2025, 2026. So whatever you see now is going to be a prolonged period of playing defensive. Of course, this is the framework. If, of course, the business cycle, let's say, bottoms around here and start rising, then everything else has to be changed. But the odds that this happens are very low because of the an amazing periodicity of the business cycle indicator. And by the way, you can relate this periodicity to foreign markets. So whatever you see here for the US market, because of the charts that I showed you before, you see it exactly in all the major foreign markets. I want to thank you very much for following this video, and I hope you found this content valuable. And if you want to really dig deeper into my research, my work, my forecast, I would welcome you to join us in www.patreon.com/Peter Dack. You will find tremendous amount of information, videos, research, and forecast. Again, your support obviously is going to help us to continue and pursue more research and more information to help you make better and informed decisions. You can join us. We have 3 different levels of membership. The first level is membership number 1 is you will have be able to see all the videos that we produce, all of them current and the future ones. The membership number 2 is you have videos and what we do every time there is economic news that are important, there is a major trend. For instance, let's say we follow very closely heavy truck sales that are sinking. We send a message to all our subscribers and say, look, this is going on. Be careful, the economy is weaker than what we think. Or otherwise, if the JOLTS indicator or the quit rate keeps on going down, we say the employment numbers, the employment is cracking, so the economy is weak. So we send that kind of information every time that happens. In membership number 3, on top of everything that membership number 1 and 2 receive, they will also get the Peter Dack portfolio. It's a 22 pages research which is published twice a month. So this is what we offer. I hope you decide to join us. Thank you very much for following us.